Okay, my name is Drew. I'm one of the senior managers here at Target Trading Academy. I welcome you all. Today's topic is why futures. I got probably two of the best futures traders I've ever met in my life from the Chicago Board of Trade, where I met them and started working with them 10 years ago this year. And today's topic is, I feel, very timely because there's so much noise in the marketplace. There's a lot of competing information for your brain space, like I was mentioning, and it's not only confusing, but it also can be dangerous because you can lose a lot of money by making a bad decision with trading. And so we want to not only clear up the air on what's available to you as an investor, as a trader, but also why futures compared to everything else out there. We just had a big snowstorm here in Chicago. And I've got a couple properties. I've got some rental property. I've also got my property. And I'm not saying that for any other reason than I didn't know where to start. There was so much snow. Do I start at one property? Do I start in the front? Do I start in the back? Do I do the drives first? There was so much snow coming at me that by the time I turned around after 10 feet, there was more snow. And that's what it seems like this market's with the opportunities for traders to trade, right? You heard about the Reddit trades. First it was GameStop, then it was AMC, then it was Silver. And, everyone's calling me. I'm sure they were calling Dan and Patrick, your speakers today, and asking them, should I get in here? Should I get out there? And there's not only all this confusion on what you should be trading and why you should be trading it, but there's just so much competition for your headspace and whether you should be in it or out of it, how much, when to get in, when to get out. So we want to clear that air, but more importantly, why futures? And I can't think of a better company than us to teach you futures because our company's been doing it longer than anybody else. Dan and Patrick have collectively over 30 years of training people professionally, thousands of successful students they have trained over the years from all over the world. And the first person speaking on this very topic, why futures, especially why now, futures versus, the GameStop trade, if you will, the Reddit traders, futures versus stocks and options, futures versus Bitcoin, is Patrick Asselone. He's an oil pit trader here in Chicago, a former MMA fighter, and I'm telling you, that background is perfect for what we do because it is a fight every day. You versus somebody else. And without further ado, Patrick Asselone, please take it away.
So can everyone hear me? How's the sound in there? And before you guys tell me it's too loud, you may want to turn it down on your side, because for some reason it's always my fault. Good afternoon, and thank you very much for your time. I truly do appreciate it. Let's just make this quick and dirty, and let's get to the meat of everything. Futures are a derivative of financial contracts that obligate the parties to transact an asset at a predetermined price for a future date and price. It's very fancy for saying futures are the absolute best vehicle for trading, in my opinion, because of the rules, which we'll get into in a little bit. Can we make money when the market goes up? Can we make it when it goes down? We absolutely can. We simply do not care whether the market goes up or whether the market goes down. We are traders. We are not owners. In my opinion, buy and sell is dead. If that's what you want to do, this is probably not the place for you. We simply do not care, again, if the market goes up, the market goes down. We are looking to take advantage of where the institutions are driving the market, because the institutions are the only ones that can drive a market vertically, contrary to what you may have heard in the last few days with this GameStop stuff. First of all, futures, a much lower barrier to entry than stocks. Just to day trade stocks, you've got to have $25,000 in your account at the beginning of every single day. So let's say, for example, you take a position in stocks 5,000 comes out of your account, you're down to 20,000. You cannot take another day trade until you have at least another 5,000 in that account, so you got to deposit it in there. Futures are a far better opportunity. Why? Stocks, for example, using the previous $5,000 trade, once you close that trade, you've got to wait trade day +2 to get your own money back. Think about that. Your own money, you need to wait to get back. That doesn't happen in futures. You have that money back immediately. You can take as many trades as you want to in a day. We don't suggest that because there are much better places than others. Notice I did not say prices, places to take entry signals and exit signals in futures than there are in stocks. Futures give you much higher liquidity and lower risk. What do I mean by that? If you're going to take a trade in stocks, you're locked out of the market in the overnight. Only institutions get to play that game. So here we go again. Institutions play by a different set of rules than the retail trader. Wow, where have I heard that before? You can't get out in the middle of the night. You can't do that. Futures, for all intents and purposes, those markets are open 24 hours. Now, there are better times than others to participate in those markets. This is what we teach to people. So if you're trading a stock, you've only got the pit session. What happens if this thing goes crazy in the middle of the night and you see all those gains you made evaporate overnight? You can't get out. Futures, that's absolutely positively not the case. Let's get to this Reddit GameStop AMC situation. As far as these stocks go, in my opinion, they are manipulated. You do not want to be in them. Why? For those of you that don't know what GameStop is going the way of Blockbuster Video. GameStop, you rent or buy video games from them. For those of you who are over the age of 30, you don't know this, but you can buy all of these online through your gaming console now. So GameStop is, for all intents and purposes, going the way of the dinosaur. So why is it being manipulated, sir? Because this is all a joke on the retail investor. Many of you heard that it was a bunch of Reddit users, a bunch of bloggers who drove the price up against the big bad hedge funds. For all of you that don't understand something, those big bad hedge funds, those big bad banks, they're absolutely necessary to trading every single day, because without them, the markets would be illiquid, nothing would move, you would not be able to get in or out of things. So, contrary to popular belief, they are not your enemy. As a matter of fact, we teach you how to identify what they are doing so we can take advantage of them making the move, not go against them. How many of you in this room would say that that's a valuable tool to have? This is what we do. This is what we teach. This is how we do this. It was not a bunch of bloggers buying 50 and 100 shares at a time that were moving Reddit stock. I was on the John Fredericks radio show Friday afternoon. He invited me on to explain what had happened. The day after Bloomberg published a story that it wasn't a bunch of Reddit users, it was actually BlackRock, it was actually the owner of Chewy.com who had a couple $100 million extra bucks lying around. These are the types of entities that move markets, not individual retail traders. If you want to play that stock game, and I am no longer a financial advisor, nor do I give financial advice, but you're fighting in a game that you can't win. For those of you that don't know what goes on with these big banks have an institutional side, they have a retail side. The institutional side trades for its own profit. They're not telling the retail side what to do. They're dumping the stuff off that they can't move anymore, or they're not choosing to move anymore, on the retail side. I was in that business. That's the way it happens. Whether you choose to believe me or not is entirely up to you. That's what happens. That doesn't happen in the futures business. All those people that jumped in at the end of that Reddit trade who got slammed again, they couldn't get out. They got stuck. And that's what the institutions do. If you look at Reddit year to date from a year ago, it was practically nothing. The big institutions drove it up. They then shorted it, drove it down. They drove it up. They drive it down. That's what they do. They've been doing this since the beginning of time. The idea is not to be against them or to be late to the party. It's to jump on when they are making the move. This is what we do here at Target Trading Academy. We teach you how to take advantage of these moves. And in many cases, we tell you where your best entry points are the day before the new session. If you're looking at Bitcoin, Bitcoin is unregulated. That's another story. There's no basis for what it is. Until every central bank in the world accepts Bitcoin as legal tender, it's worthless and it's a joke and it's extremely volatile. Your Bitcoin might be worth $40,000 right now. I dare any of you to sell it right now and show me the receipt of sale where you got full price. The CME is introducing a Bitcoin future. Now, why is that better? Because it's regulated. It's on an exchange. The exchange makes the rules. You must trade by those rules. It is for a price, for a size, and a delivery date. Right now, Bitcoin does not have that. More to come on the future of Bitcoin. With that being said, I'll hand this off to my lovely and talented partner, Dan O'Brien, to go into why it is a better opportunity to use futures versus GameStop as a primary example. Take it away, Dan.
Thanks, Pat. Well, what I wanted to do was tell you a little story about a phone call that I got. I believe that Drew and maybe Pat even mentioned it, that some of us were getting phone calls from friends and family members about GameStop in particular, not so much AMC. I'm sure others got calls about all of them. But GameStop in particular, and it was from my brother, but he was calling for a friend of his. And his friend literally wanted to put, I thought it was $500,000, but it was $600,000 into GameStop the next day. And I said, well, come on, this thing is overcooked in my opinion. I said, if you want to play around, if he wants to gamble with $600,000, why don't you just start with $40,000 or $50,000 and see how that goes? Figuring he might make a little, and he uses his profits to get into a slightly bigger size, or he gets into it and gets crushed right away and realizes, wow, that was pretty good advice not to put $600,000 into a stock that's making once-in-a-lifetime moves. And actually, I did not get the answer from that yet, but that made me think about a GameStop trade that was available the next day versus a NASDAQ futures trade that we did in the room just a few days ago, just last week, I believe. And so what I did was I looked at the chart for GameStop and looked at where it would have been at the open the next day. Now, if he had traded it before the close of that day, he would have been crushed at the open, because it was a gap open. I believe it was last Thursday morning of over $100 a share, and then it rallied, and it rallied about $220 a share or so. And so I took that dollar amount and looked at it for basically a perfect trade that you didn't get too overexcited and buy it at the close because you figured it's going to gap up and rally the next day, but rather you waited and you got lucky that it gapped open lower, and then you held on to it all the way up until the top and got out with an absolutely perfect trade, which is almost never happens. And it's certainly nothing that you can count on with GameStop, because this was the first time ever that it was making these types of moves. Okay, so if we take a look at what we have here, just using a simple 10 shares, because it was no longer $5 a share, where you might buy 1,000 or several thousand shares, but now it's on the open of this day, it was $265. Let's say you just bought 10 shares and I also wanted to keep it, normal compared to a size of a futures trade and the margin that would be needed for a normal size account. So you needed $2,650 to do that in your say E-Trade or whatever account you may have, and that dollar amount would equal 2 positions in the NASDAQ. Okay, the NQ stands for the NASDAQ futures. And then if we look at the profits again, if you got out with a near perfect exit of $200 when it rallied, so again, like it reads here, theoretically you caught the buy and the sale just right. That's $200 per share times 10 is $2,000. Okay, well, if you had $2,650 in your account for trading futures, the intraday margin, at least at the company that I use, is $1,000 for a day trade. So you'd only be able to do 2 positions. I shouldn't say only, because that's still, if you catch a big runner, is still a lot of money. And as you can see here, that in the same type of trade, a big move, but really not even theoretical, because I'm going to show it to you in a moment. We did this on January 25th. It was a 126-point move, and it's $20 per point in the NASDAQ futures. And if you multiply that by the 2 positions that you would have been able to make using the same dollar amount in the GameStop trade, that would have been worth $5,040. By the way, that was a 126-point move in the NASDAQ to the downside. Then it actually rallied a little bit, just the normal auction process back and forth, and then it dropped another, I just looked at it a little while ago, it dropped another 150 more points. So January 25th had a dramatic drop in the markets altogether. And so what I'm getting at is that the trade that we're comparing the GameStop to, it's not even fair, because I'm not comparing it from where the market broke in the NASDAQ all the way to the bottom to make a perfect example. If I did, you would have to add another probably $4,000 to this. So 2,000 versus 9,000. Okay, but I'm not doing it. I'm just trying to keep it realistic here. So again, 2,000 to 4,000. What I want to do is change the screen here for a moment. Bear with me. And it should be popping up any second. It's connecting. Okay, can you see a bar chart now, everybody? I believe we should all be seeing the same thing. Okay, so this is the bar chart from that day on January 25th. And in the upper pink zone in the upper left, the reason why that's shaded in pink is that one of the algorithms that we use to try and spot where these big moves could happen is a trending or non-trending indicator, and it's down here at the bottom and it's not trending. That's why I put the pink shaded zone up here. But when it started to break out, and these HFT indicators were showing that the market, that they were very bearish, meaning that they're on the 90 percentile sell range, the short entry was made in the NASDAQ futures about 13,468, I believe. It was a partial profit taken here, another partial profit taken there, and then this one was automatically exited by the trading program on its own, and that was your 126-point gain from the red ellipse to the bottom green ellipse. So a massive move, and again, I don't have another chart. I don't want to spend tons of time looking at charts or anything like that. There was, after this rally went a little bit higher, there was another 150-point move to the downside. So you could have actually gotten this trade nearly 2 times. Whereas the GameStop example was once, and if you bought it at the wrong spot, especially if you waited till it was high and got in, or maybe bought it the night before, using the example of a friend of mine who called my brother, who called me, it would have been a disaster. And these are the sorts of things that we actually see rather often in the futures market when things get very, very active, whether it's due to hedge funds supposedly being kicked out of the market by Reddit traders, or whatever the case may be. There could be some problem by the Federal Reserve. It doesn't matter. But when the market gets very active, we get these opportunities, not only in the NASDAQ, but in the S&P and the Dow. It could be the oil market with OPEC. It could be gold. It could be anything. Right? I'm going to go back to the other screen. Or Drew, could you, I'm sorry, could you, or are we on slides? There we go. Sorry about that. Okay, so
thanks, Dan.
That was the example I wanted to share with you. Go ahead.
No, thanks, Dan. Obviously, if you can, and Patrick can stay for questions, especially about why futures, compared to these other markets, also why we feel that if you were trading the NQ futures during a period that is more regular, obviously, like you just mentioned, than going in just haphazardly into a stock that's being, driven up by retail traders, and, in your example, GME, GameStop. But we have an offer, obviously, for those that are on this webinar to join us and not only learn how to properly trade futures, but also get the guidance. We have the charts and indicators to let you know when is the best time to get in, when is the best time to get out. I mean, I can't get over the people that were calling me, by the way, Dan, especially on GameStop, were calling me when it was already at $200 to $300 a share. And then Patrick, you just mentioned it's at 90. It's at 90. Yeah, I will change it, Dan. So when were you supposed to get in on a GameStop? When were you supposed to get out? Oh, and God forbid if you're trading Bitcoin. By the way, Dan and I were teaching people how to trade futures back when Bitcoin went up to like 20,000, and then within 3 weeks it went down to 3,000. And then more recently, Patrick and I were talking about Bitcoin just about a month ago, went up to 40 and then dropped to 32. Anyone that were in those markets during those times would have lost 90% of their value of their Bitcoin at the time, the first time, and a good 30 to 40%. Who has the stomach for that? So my opinion, the opinion of the owners of the company, learn a regulated market that was built for trading, day trading, that has the day trader in mind in terms of protection, in terms of money needed to do it. And again, it is a cash basis entity, so you get to cash out right. If you made $5,000 a day, guess what? That money's in your account to spend. So we do have a special offer here for everyone in this room. We have never made a offer like this, and we'll stay and answer questions you have either on this pricing or any questions you have on the presentation from Dan or Patrick. But we are offering 3 full months in our trading education program, which includes the following: not only all-day access in our micro trading room, and this is absolutely perfect for the smaller trader or someone that's just getting in. The micros trade at 1/10, which means a lot less risk compared to the full contracts or the mini contracts. It's really easy. It's a lot easier to learn when your movements are 50 cents to $1 instead of $10 to $100, whether it's going with you or against you. So you have 3 full months of the micros with one of our instructors, Preston. Also 36 classes, small group mentorships with Randall, who's in charge of our new member training. He normally charges for his one-on-one training $3,000, $4,000, $5,000, depending on how much time you get with him. We are including this 36 classes with him during your period, and it's a small group mentorship program that's at night, 3 days a week, Monday, Wednesday, Thursday, 6 p.m. Central, 7 p.m. Eastern, 4 p.m. Pacific time. And then last but not least, we have an on-demand video library that teaches you all of our strategies in Dan's room, Patrick's room, and for only the people on this webinar. We've never offered this. The first 5 people will get access to all these rooms. Patrick's room, who is amazing at reversals, especially off of predetermined high volume areas, which he gives you, by the way, the day before. Dan's room, which I believe is the best breakout room, up or down. And then again, you'll get Preston's room as well, which is the micro trading room, specifically made, in my opinion, for the beginner trader or the trader that doesn't have a lot of money to trade with. So I will let this settle down in your minds here on what we just covered here today. If anyone has questions, please feel free to ask. We'll stay on and answer those questions. But right now, we are offering these 3 full months at less than $1,000. We normally charge literally 3 times that for Dan and Patrick's room separately. And then it's also discounted off of what we normally offer Preston's room, which is the micro room, specifically for brand new traders or people that are trading with a little bit of money. So without going into too much more detail, I do want to open up the floor for questions. Eileen, you had a question here? Dan, do you want to take that question?
Eileen, Nishida, why do micros NQ have higher volume? Why is the sky blue? They just do. Personally, I'm a much bigger believer in having newer people. And you're not a newer person. Start out on the micros, get a feel of the market. I feel they're much more orderly. They're not nearly as whippy as the bigger NASDAQ contract per se. I think it's a lot easier to get a grasp on them and then move up to a larger contract size. But why does one contract have more than another? That's just where it is right now. And you'll rotate out of that, I'm sure, sooner or later into something else, but we'll be prepared for that. Any more questions?
If I could jump in for a minute. Eileen, let me just add to that. I think that when people are trying to scalp the NQ, call it the big one if you like, that the normal volatility that's involved in the back and forth from bar to bar is enough to take out a $200 stop. And that's per position if you buy it at the wrong time. And therefore, people are gravitating, not some, I haven't done it, but they're gravitating towards the micro because they want to use a wider stop, but still like the huge runs that you can get in the NASDAQ, like I just showed on the screen, and yet they can stay in it with bigger stops. Now, they're not going to make as much money as if they were in the NQ, but they're not going to get stopped out as much either. So I think that's a big part of the reason.
Thanks, Dan. Thanks, Patrick. By the way, we are going to put the phone number in the chat here. If anyone has any specific questions about your personal situation, you don't want to, broadcast it in the room here. If you have questions about the offer we have here, please call into the offices here, 888-203-3731. Again, 888-203-3731. Does anyone have any other questions, whether it be futures versus, again, stocks, options, Bitcoin, the Reddit trade? By the way, I love when they called out this silver trade, and then absolutely everyone got crushed on that trade within like hours. Be careful no matter what you choose to trade, but in our opinion, we think futures is especially built for people wanting to day trade.
Drew, Andrew, I'd like to add something on that. Many of you have probably heard that futures are dangerous to trade. How many of you have had stockbrokers or financial advisors that told you futures are very dangerous to trade? How many of you have been told this before? Eileen has been told this before. Would you like to know why? The reason they tell you that they're very dangerous to trade is these financial advisors, money managers, and stockbrokers are not licensed to transact futures trades, therefore they cannot make a commission on them. So it's very dangerous to them and their bottom line, not to yours when you're trained how to do this correctly. Keep this in mind. And if you believe nothing else that I tell you, believe this. Anything that you hear on financial news television is as fraudulent as the mainstream media. Don't believe any of it. By the time you hear it on TV, it's a cover story and it's over.
Great point. Great point. Of course, they didn't tell you not to buy GameStop, but yet, what was it, Robinhood? How would you like to buy all the GameStop in the world, and all of a sudden Robinhood wouldn't let you sell it? All right, does anyone have any questions? We do have the ability to take your phone calls as well. I just had a call come in here, 888-203-3731. We are making an offer that we've never offered before, so please take advantage of it. You will not be disappointed. Those kind of opportunities that Dan outlined, especially when the market's moving drastically up or down, those happen way more regularly than the GameStops of the world. I mean, give me a break. How many times have you heard of a company breaking out like GameStop in the last 10 years? I mean, I can probably count on one hand the number of opportunities in stocks that have had moves like that. Yet in the futures market, when the market's moving, there's plenty of opportunities on a regular given day.
Hey, there's one more opportunity for those of you who do watch big stocks like Google, Facebook, whatever the case may be, and they're going to have their announcement of their, their earnings announcement, and it's almost, most of the big ones are after the New York market closes. Guess where you can trade the results of that? 99.9% of you can't do it with your stockbroker, because unless you have some special deal with them that most people don't have available to them. But if you have a futures account, you can. The NASDAQ market will, the futures, if there's several of them that are all bad or all good, man, that whole thing will just go in a straight line up or down right after the New York market closes. And guess what? The futures market doesn't close when New York does. I call it the Chicago close, because it's the futures market that closes 15 minutes later. That's another way you can take advantage of the overall market using futures.
Absolutely.
Hey,
Great
Dan,
point. Thank you.
That's a great point, Dan. And I want to bring something up to everyone so you understand this. For those of you who are not familiar with the futures market, but for some reason you can't understand why the stock market opens at a different price than where it closed the previous day, because gosh darn it, it's closing. Well, I can't trade it, so how's this happening? It's the futures market that leads everything. It may not have been intended to be named that way because it does, but that's exactly what it does. The futures market leads the way all the time. Futures leads the stock market every single time, not the other way around. And if you'd like more information, just ask us. We'll be happy to show you how this works.
Yeah, and Mickey had a good point. It never really closes Sunday night through Friday. It is a 23.5-hour market. By the way, if you are a customer, because I did notice a couple people writing in and calling in, our customers, we actually have something special for you. Dan kind of previewed it. We have automation trader assist software that can actually help you identify big moves like the one Dan showed in the room. 126-point move. Right after that, 150-point move. How would you like to have all the heavy lifting done by the most advanced artificial intelligence in the marketplace? Go ahead and call into our office. We can give you details on that, and we do have special pricing for current customers that are on this webinar. We can talk to you about that if you call in. Again, our number's here in the chat, 888-203-3731. If you don't have any more questions, I do want to close with this. I want to thank Dan and Patrick, as always, two of the brightest minds when it comes to futures, literally helped thousands of people all over the world. I personally have hundreds of clients that they've helped over the last 10 years, so I know If you want to day trade, this is the right place for you. And at this price point, I mean, you're not going to go wrong, in my opinion. Well, if that's all the questions we have, again, feel free to call into the office. I'll stay on here for a little bit in case someone has a question. But again, thanks, Dan. Thanks, Patrick. Our number 888-203-3731.